And as you'll soon see, Metro Public Adjustment offers a unique opportunity for the average person to have whatever they want in life, to fulfill their dreams. I'm going to do a quick presentation for you to kind of explain what this is all about, a little bit about who we are, what we do, what you'll be doing, and our compensation package. All right. So the name of the company is Metro Public Adjustment. This is a pre-interview presentation. It's designed to educate you about, what we do as a public adjustment company, the industry of public adjusting, what you're going to do as part of our company and our compensation package. Kind of give you a chance to take a look at it, see if it's a fit for you. Here's a good question. Does money stress you out? 76% of all Americans say that money is the leading cause of stress in their life. And that's exactly what I fit into prior to coming to Metro, because I was always working part-time jobs just to make ends meet. And I was always stressing over money. What I found when I came to Metro was the solution. And hopefully you'll see that too. There's a lot of money in this industry. So a little bit about us. This is our corporate headquarters in Bensalem, Pennsylvania, which is just north of Philadelphia, Pennsylvania. We are the largest public adjustment company in the United States. Been around since 1993. I've been with them since 1994. It's veteran owned. It's owned by a gentleman by the name of Steve McCaffrey. And we operate nationally. So we're licensed in actually 47 states. And we're the founding members of the American Association of Public Insurance Adjusters. Now, as I said, it's not just about making money. We're very socially responsible at Metro. We support a lot of different organizations. We're licensed by the Department of Insurance. Okay, so we don't sell insurance or anything else. We don't work for the insurance company, but we're part of the insurance industry. And it's one of the most heavily regulated industries in the United States. So if you want to check us out, you go to any one of those departments of insurance, you'll see we're in good standings, and you pretty much have to be because it's so heavily regulated. We also have an A+ rating with the Better Business Bureau. Now, here's a question that most homeowners don't answer correctly. And that is, if you had an insurance claim, would you know what to do? Most people say, sure, just pick up the phone, call my insurance company, and they'll send someone out to take care of me. And that's the wrong way to do it. And I'll show you a better way. So insurance companies work hard to keep your money in their bank. Listen, it's a business. Bottom line, and the bottom line in any business is profit. And the insurance company's profit model is to take in on premiums, money in on premiums, and to pay out on claims. So obviously, the more they take in on premiums and the less they pay out on claims, the better it is for their bottom line. Okay, and the adjusters are coming out from the insurance company aren't coming out to take care of us or represent us or look after us. They're hired by the insurance company, paid by the insurance company to represent the insurance company. Now, I'm not here to badmouth insurance companies, just to kind of make people understand and dispel some of the misconceptions when it comes to insurance. No one's looking out for us, the property owner, okay? And most claims are underpaid because the insurance company is the one who gets to decide how much money you get paid. People need an advocate. They need someone to represent them, to look out for them, to stand up to bat for them. And that's what a public adjuster does. So we're hired by the property owner, the business owner, homeowner, and to make sure that the insurance company treats them fairly and pays them fairly. So now the homeowner or the property owner has someone to represent their interests. Here's an example. This is a claim we got involved in after the homeowner had called their insurance company. And I say never call your insurance company because you'll ultimately say something you shouldn't say. Why? Because, as consumers, we don't know what to say and what not to say. They know how to ask the questions. Okay, so it's not good to talk to the insurance company. You should always talk to a professional to handle the loss. Same thing you would do if you went into a court of law. You hire an attorney, and he would or she would do the talking for you. But things didn't go that badly in the claim process when the homeowner called the insurance company. So, what they had was some storm damage. You can see the picture on the left is the bedroom ceiling where the roof leaked. The picture on the right is the dining room below where the water leaked into from the bedroom. And then the picture in the middle is the floor that got slightly cupped in the dining room. And then the homeowners noticed some shingles missing, dried up the water, called the insurance company. And here's a thought. If you own a home, or if you don't, imagine you do, would you put a claim in for that little bit of insurance, a little bit of damage? Okay. 91% of people would not put a claim for that little bit of damage. And they have a lot of misconceptions on that makes them make that decision. But they did. The homeowners did. They put the claim in. Here's what the insurance company did. They came out and they said, listen, we'll give you some money for the roof. We'll give you a minimum roof repair. We'll give you enough money to have a roofer come out, climb up on your roof, and put new shingles back where the old ones came off. A drywall repair, minimum repair in the bedroom. They paid to protect the fan by putting a bag around it. Spot seal and paint the walls, paint the ceiling, one coat. And then to clean and deodorize the carpet, they paid for that. And then in the dining room, they paid them an appearance allowance for the floor. They basically said we can't, pay to have a flooring company come out for that slightly cupped floorboard, that one little bit of damage. So they gave them some money, called it an appearance allowance. Okay, paid some painting down in the dining room to the walls and ceilings, and again one coat. So that's one way to look at it, and it addresses all the issues. But what it doesn't do, it doesn't put it back to the way it was. And that's what insurance is about. It's indemnifying you for your loss to make you whole again. So that doesn't do that, but this does. And this is what we presented to the insurance company. This we had them pay for. Okay. First thing was, after a proper roof evaluation, it was determined that the roof needed to be replaced and that it wasn't repairable in the bedroom. And that alone was more than the whole insurance company's estimate, dollar-wise. In the bedroom, they forgot about the wet insulation. Now think about this. You can't see it, but if it went through the water's going through the roof and hitting the drywall ceiling, it's got to be going through the insulation. That needed to be replaced. The ceiling fan needed to be taken down to do a proper paint job, and then replace the affected drywall, seal and paint not only the ceiling, but the walls along with it in the bedroom, and 2 coats, not 1. We had them paid to replace the carpet. Now, I'll show you what happens to carpets when they get wet. They delaminate, they fall apart. And then move all the furniture in and out of the bedroom. That needed to be done. Replace the affected drywall in the dining room. So the insurance company's idea was, we'll just spot seal that dining room ceiling, paint over it. Drywall is damaged, needs to be replaced. You got to take that crown molding down in order to do that drywall repair. So in our estimate, we had them paid to detach, reset, and repaint the crown molding after they fixed the drywall, seal and paint the walls and ceilings, again, 2 coats, not 1. And then we had them paid to sand, stain, and finish the hardwood floors. An appearance allowance is just replace some shoe molding, needed to paint the baseboard, paint the shoe molding, painting all the trim work. Again, it's all about putting it back to the way it was. Moving all the curtains. Oh, got a little ahead of myself. Moving the drapes, resetting the mat, moving all the contents. And then those floors didn't stop in the dining room. They went into the living room floor in the kitchen. And it was one continuous floor. It all needed to be sanded, stained, and refinished. Some more shoe molding, some more painting. In this particular house, there was a piano that had to be moved. Brought back, and retuned, and that was an $800 item all by itself. Dust protection throughout the house because of the floors being done, debris removal, and a dumpster for the roof shingles. Now, because the homeowner wasn't able to access their house because the whole first floor was being sanded and refinished, they needed to stay somewhere else for a couple of days. Insurance pays for that. It's called additional living expenses. So here's a question. How would you prefer to be paid? Let the insurance company do what they want to do, which is always, that's a great estimate for the insurance company, A, because it's not going to cost them a whole lot of money. Good for the bottom line. B, puts the house back to the way it was. B is what the policy says the property owner is owed. Now, here's some statistics. Smart.
He's not even asking you, he's telling you.
Yeah.
I'm sorry, I had a little bit of background noise. Smart Money National Finance Magazine, part of the Wall Street Journal, interviewed an insurance adjuster who got out of the business, became a critic, and said that most people that she handed a check to took it. They accepted it. They didn't seek a second opinion. They didn't go to appraisal. They just accepted the money and got about 25 to 40 cents on the dollar. So about a quarter of what they should have gotten. Now, this is a government accountability study called the Opaga Report. And after one of the major hurricanes, they wanted to, the insurance commission commissioned the government to do an accountability study to basically show that public adjusters didn't actually help their clients. The insurance company would just pay the same amount no matter what. That was the insurance company's premise. And this was its findings, kind of backfired on them because the study showed that when policyholders use the public adjuster, they received an average $9,379 on their claim compared to $1,391 for those policyholders that did not use a public adjuster. Again, accountability study. Called the Opago report. You can look that up. Google that, OPPAGA. Now, this is a little study of our own. The Opago report had to do with public adjusting as an industry. These are claims that we've reopened. One of the things the public adjuster can do is reopen a claim after the insurance company has deemed it settled. We can go back and do a double take. So the first one was a church who had some wind damage. The insurance company denied the claim, paid them nothing. We brought the insurance company back out, presented a claim the way it should have been presented to the insurance company. Then they agreed to pay $187,000. Most people just say, let the insurance company come out and present their claim. The insurance company presents the claim to them. What we do is present the claim to the insurance company. So $187,000 is what they agreed to pay that church in the end with Metro's involvement. Farmers told the Gibbs, who had some hail damage, that their claim was $2,500. In the end, with Metro's involvement, they agreed to pay $11,000. And I love this one down here. Allstate paid $370 to the Zangs, who had some hail damage. I mean, what are you going to do with $370? In the end, they agreed to pay $11,000. State Farm, $5,000, $22,000 with Metro's involvement. You can see every one of those claims that were denied were paid out, and how significantly more they were paid when Metro's involvement. Now, we've served probably close to 1 million clients, and less than 1% of our clients we survey our clients, and less than 1% have said they weren't happy. So that's pretty good. Can't please everybody, but less than 1% unhappy. That's a good outcome. So let me talk a little bit real quick about what's an insurance policy covers, what types of losses, because obviously we're talking about insurance claims, and you want to know, well, hey, is there a lot of claims out there? Because a lot of times people think insurance has to do with the big ones, the catastrophic losses, and they overlook a lot of the things that insurance pays for that a lot of people don't think about. Okay, again, we know fire is covered. Sometimes the fire is not so big. It could be a small kitchen fire. Produce smoke. Smoke damage is very costly to remediate. Lightning damage, explosion, ice and snow, weight of ice and snow, ice damming, collapse, car hitting a house. Doesn't matter who's driving the car. Anything the wind does to the property, blows something into the house, does any damage, something off of the house. Anytime rain comes in above the ground or higher. Roof leak, skylight leak, window leak, above the ground, sliding glass door, above the ground, covered under insurance. All that water damage. Melted siding, burnt carpet, they're actually considered fires when it comes to the insurance industry. We don't think about that as being a fire when we think about our house and insurance, but that's a loss that's covered under insurance, just like if it was the whole house on fire. Lifted shingles, siding damage, all examples of wind damage. Water through the window. So they won't pay for the window. Okay, you got to pay for the window yourself, but they'll pay for the water damage to the windowsill, and the water damage to the wall, and the water damage to the carpet. Most people either spend the money fixing the window and all the interior damage out of their pocket, or just living with it and fixing the window. Okay, all the water damage covered under insurance. Okay, ice and snow, burglary, smoke damage. So insurance is about sudden and accidental. Okay, and we accidentally do things in our house and cause damage. Like, for instance, forgetting to open the damper on our fireplace when you start a fire. It's a mistake. It's very damaging, and it's covered under insurance because it was an accident. Puffback, that's a heater malfunction. Water coming through a sliding glass door, again, above the ground, there's the deck covered. Paint overspray. So let's say you're spraying your deck, and let's say you stumble and the sprayer hits the ground and you fall, and the sprayer hits the ground and sprays all over the house. Sudden, accidental, insurance pays for that. Okay, it's in the policy. Okay, roof leaks, water through the window again, hail damage, tornadoes, hurricanes, and plumbing losses. Toilets, sinks, bathtubs, dishwashers, ice makers, washing machines, water heaters, leaking, overflowing, causing damage. And not only is the damage to the property covered, but the remediation or the mitigation or the drying process to get all that water dried up is also covered under insurance. We get up in the morning, go down into our finished basement, we got an inch of water, we're calling our friends to take off work to help us clean it all up. Insurance pays for all that. Okay. Sewage backup, pipe breaks, drain lines, frozen pipes, all kinds of plumbing problems, all covered under insurance. Theft and vandalism, graffiti, eggs on siding, tenant vandalism, all insurable losses. Damage to flooring. So the picture in the middle, that's the carpet in that example. And that's what happens to carpets when they get wet. They start to delaminate. The backings are held together with a latex-based adhesive, and latex is water soluble. It's basically, and you can't see it when the carpet's flipped over, you can't see the damage. That's why insurance companies always opt to clean it, because A, it's cheaper, and most homeowners don't know enough to pull back the carpet and say, here's the damage. Now you got to pay for it. Laminate floor on the right, a little bit of water damage. That's what that is. It's water damage. It can be as simple as a couple of ice cubes. But laminate floors cannot be fixed. It needs to be replaced everywhere that laminate floor goes. So it's an example of not a lot of damage, but it could be a significant claim depending on how big that floor is. Again, doesn't matter who's causing the damage, even if it's the property owner. Spill something on a carpet, drop something on a ceramic tile floor, crack a tile. Listen, it's not about the tile, it's about the floor. It's about how to put the floor back to the way it was. And a lot of times, most times, it's to replace the floor. So, I've had people say, well, that's ridiculous. I got a one cracked tile and $1,000 deductible. Well, again, it's not about that tile, it's about the floor. So this is something we do for our clients. It's called our Smart Claim membership. It's free. We don't sell that, like I said, or anything else. But it's all about getting our clients claim smart by some value-added services. Now, that's our educational part of what we do, who we are, what we do, what's a public adjuster, why it's so important for a property owner to use a public adjuster, and all the things that insurance pays for. It's amazing how many people are owed money because they live with damage because no one ever told them, hey, insurance will pay for that. You don't have to live with it. You don't have to take it out of your pocket. But for what you came to see, here's what you do to get paid with our company. And you can do this online and you can do this in person. So when you meet with a property owner, a homeowner, business owner in person, you're going to do an overview of the public adjustment service. You're going to do that presentation that I just did for you to our clients so they're educated. We're going to conduct a property inspection. Now, it's a very simple visual inspection. So we're not climbing on the roof. We're not crawling into the crawl space. We're not checking the electrical system to make sure it's up to date and up to code and working properly. It's a visual inspection to identify any covered damages. We'll educate the homeowner about their policy, give them some good information, some good advice. When there's a loss, we fill out the paperwork and send it using DocuSign. And so the whole process takes about an hour to do. No negotiating, no estimating, no talking to the insurance company, just a simple front end of the loss, the easy part, okay? Now, when you meet the homeowner or property owner virtually, it's the same four-step process. It's just done through Zoom. The overview, the evaluation, the walkthrough, the paperwork, all done on Zoom. Either way you go, virtual, in person, take you about an hour to an hour and a half. Now, if you're feeling overworked and underpaid, check this out. Our starting position with our company is claim rep. So the claim rep does that simple process, that 1 hour process, or is paid 20% of the company fee. So Metro handles a loss kind of like an attorney, contingent upon a settlement based on a percentage. Metro collects their fee. The average fee on claims in the last year was about $3,074. 20% of that $3,074 is $614. So it's $614 on an average claim to do that simple job description. And then after 15 claims, we'll promote you to senior claim representative, pay you 25% of the company fee, or $768.50. And keep in mind that there's no quotas, there's no minimums or maximums. You work at your own pace. You do as much or as little as you want. So you get to decide how long it's going to take you to do 15 claims. You get to decide when you're going to get that promotion and that pay increase. And just in case you're not really good at math, that's actually 25% more money. Looks like 5% more, but it's 25% more money. After 45 claims, you become a regional manager, get 30% of the company fee, or $922 on an average claim. And if the claim happens to be $20,000, not an average claim, but $20,000, you're getting paid anywhere from $1,400 to $2,100. And if the claim happened to be a $400,000 loss, a typical fire, you're making anywhere from $8,000 to $12,000. Keep in mind that you're doing the same thing no matter what size the claim is. What you do is exactly the same. That's opportunity. Now, that's one way to make money. There are two ways to make money on Metro. One is to write a claim. We just talked about that. The second is to hire, manage, and train claim reps to teach people what we're going to teach you, train people, and build a team. So that is completely optional. You don't have to worry about being forced to train anybody. We're not one of those companies that make people train and then don't pay them anything. We give the people the option to train and we pay it. But let's say, again, that's completely optional. Let's say that you're by yourself, no training anybody, no teamwork. Part-time example, 2 claims a month as a regional manager, getting paid 30% of the company fee. You're looking at about $1,844 a month and about $22,000 a year. Pretty simple math. 2 claims a month. That's 1 a week. Take every other week off. Part-time work, spare time work, actually. Now, let's say you want to get involved in training people and building a team. There's a lot of incentives for doing that. One is, of course, we pay. If you're doing it for free, stop, come work for us. So let's say the same 2 claims you're doing as a regional manager, your personal production. And let's say you're helping some claim reps. And let's say there are 2 claim reps, and they each do 2 claims also a month. So there's 4 claim reps, from 4 claims from the claim reps. You pay 10% of the company fee as a regional manager when you help a claimer. When a claim rep on your team writes a claim, the company pays you 10% of the company fee, a little piece of the pie, a little profit sharing. Now, claim reps will become seniors. So let's say you got a couple seniors on your team and they do 6 claims a month. Okay. Now, keep in mind, you're paid 5% of the company fee, a little less, but keep in mind that senior claim reps have written at least 15 claims. So they pretty much don't need any help anymore. They're pretty much trained. They're on their own. But every time a senior claim rep on your team writes a claim, Metro takes 5% of the company fee. Okay, and these fees aren't coming out of their pockets. It's 5% of the company fee and pays it to you because a senior on your team wrote a claim, whether you help them, whether they need you or not. Okay, whether you have any part in that claim or not, because again, they've done at least 15 or more. That's why they're seniors. So that's getting to be what we call residual income. Residual income is when you do something once, you're done doing it, but you get paid over and over and over again. Okay. So, you have a senior claimer up on your team, write a claim, and you're playing with your kids or playing with your grandkids or taking a bath or eating or sleeping or on vacation, doing whatever it is you're doing, and you're making money. That's a beautiful thing. Now, let's take a full-time example. So now you've quit that job, you're doing 8 claims a month. Our company record is one person doing 64, just to give you an example of whether that's a lot of claims. And our top producers do anywhere from 20 to 25, 30 claims a month. So these numbers are very conservative. All the amounts are based on average claims. So the claim reps on the team are now doing 5. You got 8 claims from the seniors. The team's a little bigger. And the Metro has a production bonus, okay? Metro, it gives us an incentive to help our team write more claims and make more money by saying, if you do 20 or more claims in the month, you and your team, you can get an extra 5% on all those 21 claims. So instead of being paid 30% for the 8 claims you're doing yourself, you're paid 35, 15 in the middle, 10 on the bottom. You just doubled your money on claims that you pretty much are not even part of anymore because they're senior claim reps again. So the bonus alone is $3,000. The monthly income would be $13,000. and the yearly income would be $160,000. Now, this is not get rich quick. I'm not saying you're going to make six figures your first year, because you won't, probably. You probably won't make it your second year either. We've had people do that, but again, I'm saying you probably won't. We call this a 3 to 5 year plan. Okay. It's probably going to take you 3 to 5 years to start making this kind of money. Now, I remember I heard that. I thought, wait a minute, I don't want to wait, 3 to 5 years to start making a lot of money. But then I realized something, and I thought about it. I could have worked doing what I was doing for 100 years, never made six figures, because it didn't lend me that opportunity, that industry that I worked, all those part-time jobs, and even my full-time job, I could have never made six figures. And most people never get that chance because it's not in that industry that they work in. So does everybody make six figures? No, because it's all based on production. It's all based on what you do and your team. Okay. So there's an incentive to help the team. You make money, the team gets someone who cares about them. It's a win-win situation. And now somebody on your team says, hey, I'd like to become a regional manager too. Will you help me? And the reason you help, because when you help somebody get promoted to regional manager, the company promotes you to a regional vice president, pays you an extra $38,000, $39,000 a year more in overrides. So helping people helps you. And again, it's a win-win situation. Now you're making close to 200,000. And yes, we have people making that and more. And I've enjoyed that kind of income. Okay. And I don't say that to brag or to impress you, but to impress upon you the opportunity. When I first looked at this business, all this was Greek to me. I didn't know anything about any of this. But what I did was I followed the program. So at Metro, you're a business within a business, but not a typical business. Okay. A business within a business means that you're the business, you're independent contractor, you're the boss, but not a typical business. Because I think, most people at some point in their life think about having their own business, being in control of their life, stop making someone else rich, being able to have the things that they want and not just the things that they need. But a typical business has a lot of challenges, and there's a handful of them right there. And most businesses fail within the first 3 to 5 years. So, I didn't want to go through that. So at Metro, you're a business within a business working under the Metro umbrella, what means is that you have a whole corporation to support you. So you're not in business by yourself. You're in business for yourself, but just not by yourself. Now, it says there's small startup cost to have a Metro business. What is that? Well, the cost of the license that your state is going to require you to get. It's a licensed profession, so you have to get a license. Your state's going to require you to take a test and get a license. Now, I'm going to show you how Metro is actually going to pay for that, because we don't pay to start the company, to join the company. We don't pay to have a Metro business. We don't pay for the training. We don't pay for the support. We don't pay Metro anything. Metro pays us. Okay. Now I'm going to show you how Metro actually will pay for the cost of the license, which is the only investment you'll have. You can do this business full or part-time. There's no inventory because there's no products to buy or sell. Okay. We have a proven system. All you need to do is follow that same system I did to get all the training and support you could ever need, always, constantly, continually. Residual income, advance payments, full tax advantages. Listen, just starting a business, getting an LLC or incorporating gives you tons of tax advantages. You also have unlimited income potential. There's no limit to what you can make. It's only limited by what you and your team do. Now, benefits. It's a recession-proof industry. So the economy doesn't affect us. We're pandemic-proof. We didn't have to close down for a minute. We're time freedom because you control your schedule. Company investing, excuse me, helping people, great benefit to this business. And you can earn 2 company paid trips every year. Now, here's the $1 million question people always ask is, how do you get claims? Does Metro, tell us where these claims are? Does Metro set these claims up for us? No, that'd be way too easy. And they pay us a whole lot less money to do that. Okay. So as a business owner, we're responsible to generate our business. Kind of an example would be if I was going to be a real estate agent. Okay. Kind of the same thing. I'm an independent contractor. It's my own business under the umbrella of a corporation. And all you need to do is follow the system. Because I remember when I first heard that, you might be thinking the same thing. That's got to be really hard to do. And I remember thinking that. And what I found out was that it's pretty simple if you follow the program. Okay, we figured it out. I'll teach you the same program that I was taught, 27 years ago when I first started with this company. Some of the ways we do our generate our business is policy reviews and property inspections, and we could reopen a claim up to a year old. We find people money that they're owed by their insurance company by doing a property inspection, and money that they're owed but they don't know about it, and they don't have to pay it back. It's not a loan, and nothing happens to the insurance as far as being penalized for using it. It's not like auto insurance. Another misconception people have. So it's a huge referral-based business, and we network with a lot of different industries, like plumbers and real estate agents and home inspectors and contractors. So how do you get started in this business? You need to complete the enrollment. The enrollment is an independent contractors agreement. Typical ICA makes you part of the company as an independent contractor, not as an employee. Right? Just some requirements. You need to attend a Metro Quick Start, which is a Saturday course, get you off to a quick start. You need to complete 3 claim observations with a licensed trainer. So we're not just going to tell you what to do. We're going to show you how to do this business from beginning to end. So you need to see it done, the whole process from beginning to end with a licensed trainer at a minimum of 3 times. Some weekly training. All our training is virtual and recorded, and then to get the license. Now, every time you do a completed claim observation with a licensed trainer, Metro pays you $200. Every time you see the process from beginning to end, you're paid $200. You need to do at least 3 to finish the training program. So if you finish the training program, you're guaranteed to be paid $600. You can use that money to purchase the license. Right? License varies from state to state. It averages out to be about between $200 and $500. So the $600 you will make after you complete the program, you'll use to pay for the only investment you have into having a Metro business, which is the license that the state requires to get. And again, we don't pay Metro anything. So the next step to get started, complete the enrollment. It is free like everything else. It'll register you for the different training links in a welcome email. So we have training, you can get in with all the training. We'll schedule a virtual property coverage review training for you, show you how to inspect the house virtually. So what you're going to do is you're going to receive an email with a link for the enrollment. So I'm going to close this down now here, open this up for questions.